Hi, welcome to the Market Alert for Thursday, the 27th of January 2022. So Powell's going ahead with raising rates, so he says at the moment. So stocks and bonds puke as Powell hints at sooner, faster QT, that's quantitative tightening. And today's performance raised the spectre of Powell's rookie mistake in 2018. And I've mentioned this many times in the Market Alert about what happened in 2018 and how they had to reverse policy, but we're going to have to see if he's going to stick to his guns this time. The news dominated obviously by this. Fed warns soon to be appropriate to raise rates. QE ends in March. The Fed says that asset purchases will end in March. Balance sheet shrinking, quantitative tightening will start after rate hikes commence. Good luck is all I can say with this one. And this is staggering because we have, kryptonite inflation, and there's no doubts about it. This will end a decades of long monetary policy Ponzi scheme anyway, because I think that's the idea anyway, is to inflate the debt if they can. It means buckle your seatbelt, Dorothy, because Kansas is going bye-bye. Yeah, absolutely. You can see the storm clouds gathering, so I think maybe they're resigned to it now and just think, well, okay, we've got to go ahead and do this, no matter what happens. And that seems to be their intention at this point, so we'll wait and see, won't we? But certainly on course for a major catastrophe in the markets now. Today we've got advanced GDP from the US. This is at 1:30. That's the main news item for today. We've got a few other ones as well, but the main one is going to be the GDP forecast at 5.3 and 2.3 previous, so might bring the market back a bit, but at the moment it's on the downside. Another thing to note as well with the inflation thing, the Baltic Dry Index is dropping like a stone as well, which you can see there, down at 12.96. The shipping of goods is not happening, so more inflationary pressures behind the scenes and supply issues as well. And the metals are being hammered, and you can see that silver is heading back up to these levels up here, where no doubt we're going to see this actually trade to. So we'll more on that in just a moment, but let's have a look at the Dow, and this is yesterday's daily action. You can see here, and prices trading up and then failing and then reversing overnight, and we've already taken out yesterday's low already, but we're sitting at the golden ratio at the moment, drawn in from here to here, finding support there at the moment, or just about finding support, but through the previous day's low, which you can see quite clearly in the 30-minute chart there. There's yesterday's low, and you can see overnight the market has moved sharply lower. Good point, actually. It's moved significantly lower, hasn't it? Let's just get a ballpark figure from there to there. 642 points already on the overnight, which is enough to give the market a bit of a bounce at the open. They'll do whatever they can to try and bring it back, because as the news spreads that they're not going to have the Fed put supporting any more corrective moves, they're going to think about how do we get out with some profit out of this deal, on the basis that they're going to assume that the Fed is serious and Powell is going to increase rates. In the German DAX, a bit more volatile actually. You can see yesterday the market trading up to the 62% retracement that we drew in from here to here and then projected back. It stayed there until Powell spoke, and then it was only knocked back a touch overnight, and then or after the announcement I should say, and then overnight the price has been hammered down to the 62% retracement, drawn from there to there and projected back. So watch the 78.89, because that takes us back to Monday's low. If that's taken out, then we have to go back to the weekly chart to find the other areas of support, which you can see there. So again, very important level there in the weekly chart. I can just highlight this and drag it out so you can see this is going to be crucial So think about 14,800 ballpark if we do take out Monday's low. That's what you're going to be looking at, because we did go down and have a look at that on Monday. In the 30-minute chart, again, you can see how we've gapped down overnight, and price is moving lower. At the moment, below the low as well, but finding support at the moment. Again, a bit like the Dow, we're certainly oversold in the 30-minute. We could get a bit of a rally. Don't discount the fact that what the headlines are saying, they can do that to wrong foot you, just a bit like yesterday where the market moved to the upside. However, don't expect it to hold. That's the key. Unless they'll say, if they do, if it does hold, then they'll say, oh well, we've already priced it in. That's usually the excuse. And in the 2-minute chart, you can see prices just moving in one direction. They attempted a short. This was a loss of 23 points. Then we had a long, which produced 25, so not really a great gain there. The market was off straight out the starting gate yesterday, as we can see here. And then, of course, in the afternoon, it was a bit wilder as the market waited for the Fed. The market then treading water. There's the Fed announcement. In the DAX 2-minute, you can see the reaction there. And then, of course, we had overnight where the market has moved sharply lower. And at the moment, where we're currently is below the low there, finding support down at the 15,050. So it's got to stay above that 15,000 level. It's very important. If not, it'll be moving lower. But support in this market at the moment, like I say, don't discount a rally to start with, because it wouldn't be unusual for that to happen because of all of the bad news, just the wrong foot traders out of the start. But we'll get an idea when the futures opens. Okay, let's have a quick look at the metals. These are being hammered. I said this earlier on in the week. We're going lower. I've still got orders in for $20, and I'm going to add some more, because that's what they're going to do. They're going to take advantage of this and hammer the market down with the US dollar moving higher. So you've got the devaluing dollar moving higher. It's the worthless dollar, actually, I should say, we're moving higher. And you've got an asset that is 60% cheaper than it was in 1979, being hammered to the downside. So that is a blatant manipulation, but a fantastic opportunity for the accumulation of an asset that's going to be very useful as the inflation continues to rip behind the scenes. Like I say, the Baltic Dry Index shows that there's a supply issue and also the lack of shipping of goods. So it's only a matter of time. And I suppose what's happening here is that there's an 800 million ounce short position by the Bank of America, according to a few reports, and they need to get out of this, and the only way to get out of it with a profit is to actually slam the silver price. So any excuse. So expect this to be hammered a couple of dollars today. Personally, they'll use that news to do precisely that. That gives them the ideal opportunity. Bit like what we saw in March of last year, and these sort of moves here. So if we go back to March of last year, you'll see exactly what I'm talking about. I've shown this a few times, and that's what we're looking for. So bring it on down to $20 preferably. That would be ideal. You can go lower if you want. I don't mind at all. It'll be the trade of a lifetime when it does turn around and they take the lid off, because there's night follows day. Where's all the money going to go from the stock market? If that continues to move to the downside, it's going to go into gold. It's going to go into other areas, cryptos, etc. as well. So as they abandon one, they move it around into another. Okay, that will do it for this one. It's going to be an interesting day. Let's see what happens. And as ever, thanks for watching. See you in the next one.